You have a buy rating on Tesla, $267 price target, but is Tesla making cars more profitably than BYD does, and do you expect that to continue?
What Tesla has to do, and so this year was the tale of Tesla cutting prices, impacting their gross margins. We think there was an intent to that, and that over time, they expect to sell a lot of full self-driving FSD software to people who already own their vehicles. That's a big key to the story, because right now, their profit margins have suffered, but we think that's with a long-term plan in place to sell FSD software the same way Apple sells services. And so ultimately, we think it's through FSD software and through the vertical integration that Tesla's the best in the world at. It will ultimately result in higher than average gross margin and profits for their EVs relative to anyone in the marketplace.
Have you ever compared Tesla to a company like Apple? If these two companies were placed side by side, what would their similarities be, and how possible is it for Tesla to attain the level of growth Apple already has? Join us as we find answers to these critical questions.
And our next guest, he was right about the big rally. Dan Ives, Wedbush Securities Analyst. I would guess by the end of this year, you'll be atop the leaderboard of CNBC appearances, Dan. Although I'm willing to take an over-under on that. And you know what? I'm going to love every one of them. So happy New Year.
And it's great to be here.
Good to see you. You had a good call on tech overall. You continue to be quite bullish. Let's start with Tesla, though. Just give me your take on those numbers. You know, Phil just mentioned 2.3 million. Are you going to be towards the high end in terms of what you expect them to deliver this year?
Yeah, I think whisper expectations could be higher. Look, this was a strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand, and that's the important thing going into 24.
Yeah, where is that line? Why is that the case then? And in particular in China, where BYD is such a strong competitor, are they going to be able to maintain their market share?
Yeah, BYD has done a phenomenal job, but I do think if you look in the driver's seat, it's Tesla and BYD. Gained some net share from NIO and others. And in China, especially if you look at the last few quarters, there were fears that this price war was going to continue. It actually hasn't. See, now, to Phil's point, you're seeing price stabilization. That's very important because now the Goldilocks scenario, margins upticking, demand upticking. That's where, in our opinion, you see $1 trillion market cap for Tesla over the next year, despite many of the haters continuing to hate.
Dan, I have to get your take on Apple this morning with Barclays revealing its downgrade over cooling iPhone demand. Do you agree with the assessment there? Your channel checks showing the same thing about the demand picture for iPhones?
I mean, the last 48 hours, it hasn't changed from what we've seen over the last month. I mean, look, and I get some of these calls from a valuation perspective, and many that have been naysayers over the last year. But if I look at iPhone 15, we have not seen number cuts from our checks in Asia, and that's important because I think it shows that this upgrade opportunity is actually manifesting for Apple. I actually think the mix is much more pro.
Concord Genuity, a leading investment banking and financial services firm, recently issued a bullish note on Tesla. The note compares Tesla to a brand like Apple and praises its battery tech and residential energy products. According to the note, Tesla is rapidly creating an Apple-esque ecosystem of energy products harmonized in electrification to become the brand in energy storage. It further cites Tesla's innovation in battery chemistry, demand, and manufacturing, as well as its own designs, and its integration of solar panels, Powerwalls, and electric vehicles as the key drivers of its competitive advantage and growth potential. In this video, we're going to explore this said similarity between Apple and Tesla and why the car company may be bigger than most other investors and analysts think.
Tesla's infrastructure in manufacturing is leading edge. Why have I read detailed profiles about how BYD's is better?
Look, BYD has some competitive advantages. They have a base that's purely in China. Tesla operates in the United States, in Europe, but Tesla's putting things together from a manufacturing perspective that are way beyond what other companies have done. I mean, they're building these molds in their vehicles for the Model Y, for example, this gigacasting that essentially breaks down a vehicle into only a few parts versus hundreds or even thousands before that. They're way ahead of the curve and ahead of their competition and learning how to manufacture efficiently at scale and innovating in places that other companies are just trying to catch up now.
But will they be hamstrung by the relatively limited number of models that they offer?
It's a great question. Look, ultimately, right now this year, they'll be in and around 1.8 million, about the same as BYD. We expect that to grow a lot in the future. We'll see what they say about 2024 on their earnings call. But we expect this company to be in the tens of millions of units over time. And I think they're planning the same. Look, when Tesla had an Analyst Day in March, they talked about removing some things from their production line, like rare earths, in order to make sure that they can scale up to this tens of millions of units. So that's their ultimate goal here. And when they get there and they're able to sell additional software to vehicles, we think that'll create a huge improvement in their gross margin profile.
The note from Concord Genuity raised its own price target as well as its rating on Tesla from a hold to a buy, and it expects Tesla to report strong quarterly results in April 26th to a 70% growth in revenue and a significant increase in net income. That's not even all. The firm went on to further disclose some things about Tesla, stating how Tesla is like Apple on steroids. Hey guys, welcome back to Tesla Tomorrow. Tesla and Apple are two of the most innovative and influential companies in the world, and they've both got loyal fan bases with visionary leaders and disruptive products. However, some analysts and investors believe that Tesla is not just similar to Apple, but it surpasses it in many ways, and they also claim that it's like Apple on steroids, meaning that a faster growth rate and high level of vertical integration and a more ambitious vision for the future are the order of the day. But could they be right? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on that post notification bell to keep up to date on everything going on with Tesla. Tesla's growth rate is phenomenal, especially considering that Tesla is Apple on steroids. By saying this, the implied meaning is that Tesla has some of the same qualities as Apple, but amplified and exaggerated. Like how Tesla is more focused on manufacturing and vertical integration, and it produces most of its own products like batteries, motors, and software, with Apple relying on suppliers and partners for many of its products. Tesla also owns its own factories and it operates them too, as well as its own stores and charging station, with Apple outsourcing its products and distribution. But that's not even all. Tesla is more ambitious and visionary than Apple. The automaker's vision is to accelerate the world's transition to sustainable energy, and it's got a wide range of products and services that will help it to achieve that goal. Tesla is not only making EVs, but also solar panels, battery packs, and autonomous driving software, and it plans to launch new products like Cybertruck, the Semi, and the Roadster to challenge conventional norms in the auto industry. Apple, on the other hand, is more focused on refining and improving its existing products, like the iPhone, iPad, and Mac. Apple's innovations are more incremental and evolutionary rather than revolutionary and disruptive. It's also important to remember that Tesla is crushing its competition. Have you ever wondered about the fate of Tesla in this ever-changing industry? With more EVs hitting the market yearly, we're forced to fear the future of Tesla, but do we really have to? As we zoom into the era of clean energy and greener energy, Tesla is kind of like the cool kid leading the way. The automaker is not just building EVs, but it's also crafting a sustainable future for manufacturing, transportation, and energy storage. It's like watching a thrilling race where Tesla is in the lead and others are trying to keep up. And now there are some new EV startups in the US trying to ride the Tesla wave. But let's be real, they've hit some bumps along the way. And the road ahead doesn't look super smooth either.
As always at Vote Down, Votes Not recommendations. We have a nice EV theme today as we did get a lot of these EV figures. So that is something to look forward to. We did not have earnings catalyst, but we did have some of these electric vehicle delivery numbers. So starting things off with the behemoth of the EV world, that is naturally Tesla, which had very much a banner 2023, but reporting Tuesday above consensus deliveries for the fourth quarter. And in the process, it did reach that annual goal. Analysts were generally upbeat about the numbers. We did see that one analyst called this a major achievement as far as their fourth quarter deliveries go, coming over 484,000 units. That exceeded the 480,000 units that had been expected, and another figure called for around 478,000 units. So whatever the forecast you were paying attention to, this did come in above that. Production also came in at 495,000 units, in line with a lot of what had been expected at around 500,000 units, but some were a little bit more optimistic. Again, I think it's what really depends on what prediction you were paying attention to. But the production shortfall versus expectations, some analysts said, reflect this strong inventory control during the quarter. Model 3 and Y deliveries were strong at 477,000 units, with China a clear area of success. Now, Dan Ives, who we have to discuss when we discuss Tesla, naturally did say this was an important quarter for Tesla to show really strong deliveries and the strong momentum into 2024.
He has also highlighted the uptick they've seen since third quarter as far as their global checks. So naturally, Ives is one of these notorious bulls, but I do think he makes some good points. We are seeing some selling today. Initially, they opened a little bit higher. I was watching the price off the open. We're now slightly lower, but not really. I mean, like, not seeing massive outperform or underperformance, just given the rest of some of these major tech names and their weakness today.
Yeah, the market's taken a little bit of a swing to the downside since we began talking here on the show. So I'm not surprised to see Tesla swing negative, but it's still outperforming the overall market. I thought Mark Delaney at Goldman said it best. He just said they're solid numbers, and that's what we've sort of become accustomed to seeing from Tesla. What the market does with them, that could be anybody's guess, and it seems today the market likes them.
Right, and so now to shift gears and look at a name that the market isn't liking so much as far as their delivery numbers, that is Rivian. As Rivian has been more of the younger brother to Tesla as far as its production and some of its production flaws go, but we did see they produced around 17,541 vehicles versus the 10,000 that we saw about a year ago at their production facility that is actually not far from Chicago, back in Normal, Illinois. They did deliver around 14,000 cars in their fourth quarter. This fourth quarter delivery figure was below their third quarter figure and below consensus. For 2023, the company produced around 57,200 vehicles and delivered around 50,000 vehicles, which exceeded actually management's most recent full year production target, calling for around 54,000 vehicles. So what we do know is the company will announce their fourth quarter results now February 21st. It's the next major catalyst to watch for Rivian shares. They have been pretty consistently lower all year long, and I think it's a very competitive market. We're seeing that, but right now you have to be posting big beats to really see any enthusiasm, because you have a name like Tesla that beat, and we're seeing weakness. So I think no surprise to see Rivian lower today.
The most significant challenge to Tesla are coming from things like other automakers and groups of Chinese EV manufacturers. However, these automakers still have a long way to go to catch up. Based on this fact, it remains abundantly clear that despite a long list of compelling new EVs coming to market, Tesla is still the dominant leader, not only in terms of sales, but also in terms of tech demand and profit margin. What most investors fail to understand is that Tesla has made a historic rise to the top car market. And it's all thanks to its cutting-edge EV tech and its advanced battery solutions. Led by Elon Musk, Tesla's rise has been meteoric, and that is not surprising. On Wall Street, Tesla is more than just a symbol. It's a phenomenon. It's a jaw-dropping stock of 7,278%, with a surge like that over the last decade. That is a financial supernova, capturing investors and the market's attention like few other companies. This car company has made more significant things than just cars, but rather it's making a big move to greener and more efficient driving and manufacturing. Tesla is also ahead of the competition, and there are a ton of reasons for that. First up, Tesla doesn't play the dealership game. You know how regular companies share their profits with other dealers? Well, Tesla skips that and sells direct to customers, and the result is more cash in the automaker's pocket. And then there's FSD.
You've been very bullish on autonomy. Yes. Vehicle autonomy, of ETF all around it, robotics and the like. What do you make of what's happened with Cruise, the shutdown of Cruise, at least the temporary suspension of it? Derek Khosrowshahi, who runs Uber, was on the broadcast last week. He said he doesn't think that autonomy, in terms of autonomous vehicles or robo-taxis or the like, are a real thing for another 5 or 10 years. Meaning, and by the way, I think 5 or 10 years ago, he would have said 5 or 10 years ago, that was what, you know, so
would Elon,
and so here we are.
Yes.
So what, have you changed your view about that? No. I mean, you must have, because I imagine if we go get tape of a conversation that we all probably had 5 or 10 years ago, we probably said 5 or 10 years from now.
22, 23, right. 24. We actually delay ours by 1 year relative to Elon, so maybe it should be 2 years. But here's where we've learned how important Tesla's proprietary data is. It's 5 million robots around the world. Cruise didn't have anything like that. It had hundreds. 5 million robots around the world collect data every day and send it back to Tesla. Tesla has more corner cases, which means disengagements, accidents, information like that, than all the other companies in the world combined. And I have to tell you, watching the breakthroughs in AI that we are seeing, they are astounding, the speed at which this is moving. So it is interesting. I think it's a data issue. Autonomous taxi platforms are the biggest AI project in the world, and therefore we think Tesla is the
but
biggest
you have sold, you've sold Tesla shares, and it's, it used to be the #1 holding, I believe, in your ETF. It's now #3. You've sold about 20 million shares.
Yes.
Why?
So, well, whenever it goes up, it was up about 150% relative to our other names, many of which had not moved. So we will always recycle that way, take profits. And I would also say, listening to Elon on the last conference call, he's very concerned about the economy, as we are.
Kathy, will I look outside 5 years from now and see GM and Ford EVs everywhere?
It's very interesting to hear both of them pull back, saying,
but do you think, with this new way, I think, I don't even know if we'll be talking about GM and Ford in 5 years.
What is interesting about the news that both of them are pulling back for profitability reasons, they can't be profitable in this space unless they scale. That's how this works.
It's a catch-22.
So it's catch-22, and their shareholder base is very internal combustion engine oriented, and they want their profits now, and they want their dividends now. And they don't want that kind of investment. So how are they going to do it? Losses.
Will they be able to?
I don't know. I don't know. All I know is, back to the Tesla question, as they are pulling away, our market share expectations for Tesla go up.
Right.
You know? And so to answer the question, we sold as it was up 150% relative to everything else. We have not sold much since then. And it will, if we're right on this autonomous taxi opportunity, it will remain in the top 5 in our fund, in our flagship.
Tesla's been developing FSD since 2016, and the recent progress shows that the car company's self-driving software is becoming better than that of its competition. Every Tesla car is equipped with the hardware necessary for it, meaning that customers only need to buy a software package to use it. Based on Tesla and its performance in the market, it's pretty clear that things are quite exciting. But besides Tesla, no other car manufacturer is developing in-house self-driving software like this. Note that Waymo, Cruise, and Mobileye are not car manufacturers. Therefore, for other car makers to include this technology in their vehicles, they've got to license it or do it themselves. And no doubt, that will increase the vehicle's cost. Tesla's FSD positions it to be at the front of the recent AI revolution, and for this reason, Tesla bull Cathie Wood describes the car company as a hidden gem of AI-related stocks, believing that the biggest beneficiaries of AI tech will be those companies with the largest proprietary data sets. In a previous interview, Wood said that Tesla has the largest pool of real-world driving data in the world, and that the company has more of the kind of information that will become valuable to its future endeavors. Let's talk a little bit about numbers then. Cathie Wood says that AI is going to make knowledgeable workers 4 times more productive by 2030. Even her company ARK Invest predicts AI could rake in trillions of dollars. And guess who's in a prime spot to cash in on this? That's right, Tesla investors. There is also a robotaxi, one of Tesla's biggest innovations and one of ARK Invest's most anticipated projects. The firm is pretty hyped about robotaxi, saying it could pull in trillions in revenue by 2030, but that's just going to be quite a bit of money. ARK predicts that the robotaxi business will contribute 67% of its expected enterprise value and 64% of its expected EBITDA in 2027. That's not all. It also expects Tesla's EVs to contribute 47% of its revenue in the same year, despite having substantially lower margins than robotaxi revenue. But here's the scoop. While Tesla's sitting pretty, there is quite a bit of homework to do. For one, battery tech, and that's the biggie. Tesla has made significant strides in battery technology, especially with its S and X vehicles. But there is a need for continuous improvement for this technology. By improving its battery tech, Tesla can increase the range of its vehicles and make them more efficient, and this will not only appeal to customers, but also help Tesla meet strict emissions regulations that are being put in place around the world. It's simple. By improving batteries, it means that cars can go for longer and customers are happier. Plus, it helps them tick all the green boxes on the global eco checklist. Batteries are like the secret sauce for electric cars. There's no doubt that many compelling EV reasons do exist on the market today. Plus, more are on the way, and some are coming very soon. However, it's a known fact that Tesla has been the first mover over and over again. In a world where change is the only constant, Tesla is setting the pace, and the rest, well, they've all got to hustle hard and catch up. No doubt Tesla is still volatile and controversial, more so than Apple. In fact, Tesla's stock price has been subject to extreme fluctuation driven by high expectations, speculation, and sentiment. and the company's valuation is often questioned and criticized by skeptics and short sellers, who doubt the company's profitability and sustainability. However, in all of this, Tesla still remains the unique company that will change the face of transportation. What do you think? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.